The stock market retreat continues on. This is the S&P 500 today. Obviously, I always say whenever you have bad days, it's always these ones leading the way. Why? These are the biggest companies. They led the way on the way up, and they're going to lead the way on the way down. Now, still a lot of green right here, a lot of green right here, and some green right here. Remember, guys, when stocks go down, not everything goes down. It doesn't go in unison. You know, I have my Magnificent Seven versus the real Magnificent Seven that we did from the beginning of the year. I'm up for the year about 2%, but today I think my stocks performed worse. But guess what? I don't care about the short run. I don't care what's going to happen in the short run. What I care about is looking at Mr. Market getting all high and mighty and going up like crazy and me being cautious, and Mr. Market getting really scared and upset and doing things like this, which allows me to buy stocks I like at cheaper prices. Nvidia down 3.5%, Apple down 0.5%, Amazon 1.5%. The NASDAQ finished down 1.7%. The Dow finished down 0.6%, and the S&P a little bit over 1%. So the NASDAQ all-time high was 20,225, I believe. The S&P was around 6,000. I don't know what the number was, but we're in correction territory, I believe, on both. Definitely the NASDAQ, because remember, correction's about from the high, not from the start of the year, from the high. So these are things to watch out. So obviously, if you're like everybody else in the world, you want to know, when's the red going to stop? Well, guys, remember, we're value investors. Unless we're retiring tomorrow, we never want the red to stop. We want things to go down even further. Why? We love buying great companies at great prices. That only happens after days like this. And keep on going. We had an amazing bull run, a secular bull run since 2009. March of 2009, 16 years ago. This secular bull run has been incredible. We've had a growing economy. We've had margin expansion. We've had low interest rates. All these things have worked together. But of course, the number one worry on investors' mind are tariffs. So, guys, what I always tell people is that's just the excuse right now. In a room filled with gasoline and a fireplace and a fire burning in the corner, we don't know which spark will cause the explosion, but a spark will cause the explosion. In that same survey I saw, they said AI was 2% of people's biggest concern, the AI bubble. And maybe there is no bubble on AI. Maybe that AI bubble is just what's been going on because of our bubble in general. As I've always said on this channel, I think crypto and Tesla are the poster children of this bubble. And speaking of Tesla, it has had a very, very tough run this year. Down to $225 today. $12.70, 5.5% almost. It is down 42% year to date. It is down 51% in the last 3 months. But guys, look at this. Last 1 year, 32.5%. Now, what does this mean for this company? Well, guys, Amazon and Tesla were two companies that 10 years ago I was saying was overpriced, and they just kept compounding. They were definitely helped by a raging bull market. Let's not deny that. When there's a raging bull market, people don't care about valuations as much. But eventually, people care about valuations, and they care with a vengeance. Have we hit that point right now? I don't know. We have no idea of knowing. All I know is valuations are high, and a lot of people that probably shouldn't be making money in the markets are making lots of money in the markets off of random things like crypto. Like all these other, companies that are selling for valuations that are a little too ridiculous. Something that people have not been seeing, gold, $3,043 at end at today per ounce. That's a big, big run up, almost 100% gain in the last, year and a half or 2 years. Big leaps on gold. Nobody's talking about it that much yet. Could that be the next bull market? Remember, I do agree with the guy I make fun of all the time. There is a bull market somewhere. There's always a bull market somewhere. Is gold the next one? I don't know. I own gold miners. I've owned them since 1,800 on the gold per ounce. Thinking to myself, you know what? Gold seems pretty cheap relative to history, and we have a long history on gold. We have thousands of years of looking at gold and how it performs relative to economies, etc. But not only that, those miners that I owned, they could make money on gold at $700 an ounce at the time, and they were selling for $1,800, $1,900 an ounce. That's when I was like, okay, there's a disconnect here. there's probably some money to be made in gold. Now, I didn't invest directly in gold. I invested in the gold miners, which is still doing well, and I think will continue to do well, but people got to remember that. Now, the reason I didn't invest in gold itself, I'm a speculator. Even though gold has a long track record, I think it's more speculation. I want to buy something that can generate cash flows. That's why I bought gold miners, because those guys take gold and make cash flow from it. And I didn't know exactly which miner to buy, so I bought the ETFs. Very simple move. And guys, remember, every investment's the present value of all future cash flows. You follow our channel, you'll hear me do the same things over and over. I just texted my stepson. My stepson, great kid. I text him quotes every single day. Those quotes that I text him are money related, but mostly mindset related and life related quotes. And these are things that I've heard 1,000 times, and I still look at them. I'm not looking for them to send to him. I see them, and then I actually have on my OneDrive on Microsoft a folder just for quotes, because I keep repeating them over and over. It's the basics you got to do over and over. We can't get lost in the minute details of everything. I want you to remember that investing is simple, not easy. The not easy part is the stomach part. If you're a believer in Tesla, if you love Tesla and you bought it at 480, I have one question for you. What are you doing at 225? You got to be backing up the truck. Look at a company like Adobe. Adobe is a company that I own, and I've owned it, and I bought it sub 440 or something like that. And I said at the time, maybe it was 420. I got it. I don't remember, but I said at the time, I hope it's a 200. Well, it's on its way. It's at 391 right now. And I think Adobe is a company that everybody's thinking that AI is going to screw it over. I don't think so. I think Adobe's going to do better because of AI. And if I'm wrong, I'm wrong. But I look at this company, I go, there's a lot of juice here. You know, it's another company that's making me very, very interested. The Googly Moogly. This company fell below 160 today. Guys, let's pull up Google. I'm going to show you guys my assumptions on Google because I want you to see this. Remember, our stock analyzer tool is so important. It takes a story and the numbers and puts it together and tells you what's the right price to pay based on your assumptions. Now, we don't know the future. We're humans, we make mistakes. We got to have a margin of safety. I sat in here and put 12% desired return on Google on a 10-year analysis. And I didn't do ridiculous assumptions here. 4, 8, and 12% revenue growth, profit margin of between 22 and 26%, an earnings multiple of 20 to 26, and my 12% return. Guys, the company's at 162 today. Ready? Bam, 160 is the number for the middle assumptions. I look at this going, okay, this is interesting. So I'm going to add it back to my watch list at $160. It's going to notify me, and I'm going to sell puts at lower prices. That's what I do to generate income. I buy some shares if the price is really good, and then I sell puts at lower prices. What that lets me do is it allows me to collect income on somebody else's desire to sell me Google at a certain price, but I want that price to be lower. So I'm basically being paid to wait for our stock to fall to a lower price. That's something that interested you. What we do is we sell covered calls and we sell cash secured puts as part of our strategy of making money on stocks we own. If that's of interest to you, I want you to do me a favor. We're putting together a great class for learning options. Email VIP@everythingmoney.com and say, hey, I'm interested in learning more about options. That's all you need to say. You'll be added to our list, and we're ready to launch our options class. It's awesome, guys. I use options just last month. I don't even have all my money invested yet. I wrote $40,000 worth of options just yesterday on this month. So I'm going to see how much ends up being profit, but my guess is probably half of that will end up being profit. And that's pure cream on money on stocks I currently own. That doesn't even include selling puts on companies I want to own. So guys, here's how great options are for me. When I sell puts, that's money that I want to buy. I want to buy this stock, Google, at 150. Somebody will pay me money to buy Google at 150. Instead of making 4% of my cash in my account, I can make 10 to 15%. Worst case, I get the money. Best case, I buy Google for 150. Now the hard part is, what if Google falls below 150? I still need to pay 150. The flip side is selling covered calls. Guys, overall, I expect to add 2 to 4% a year on my portfolio's returns by selling covered calls. There are a lot of people out there who claim to do 10 or 15% a year. Hell, last year Mo did 7%. So there are ways to make big money, but this is all extra money that you have to have the stomach for, but it can change your life because 3% a year over 30 years is talking about over double your money. almost 2.5 times your money. And that's big life-changing money. So if you want to do that, again, email VIP@everythingmoney.com and say, hey, I'm interested in learning about options. Thank you for your time.